Hello, everybody. Hello, everybody. Welcome to the Trading Battle, where we trade for fun, profit, and charity with some of the greatest traders in the world. My name is Boris Schlossberg. I'm your host. So glad to have you guys with us. Please be sure to, first of all, follow us so that you can be notified whenever we have new trading battles coming up. We're going to have many of them coming into the end of the year. But most importantly, also post up any questions you guys may have as the show rolls on. I'll be happy to ask them of our traders today. And today I have two of the best. I have truly pro traders today with me. I have Nick Syiek and Chris Pulver today, old hands at the game. Both of them very, very seasoned traders. Let me introduce you first to Nick. Nick, of course, is the head honcho at A1 Trading. He's got a very, very strong background both in finance and, I just found out, computer science. So one of the things that Nick does so well is he produces these incredibly useful indicators for traders, and he actually constructed many of them himself. So that's very cool. He is the, I believe that's Chris at Streamwise Capital. He's got quite a lot of passion, obviously, for both technology and trading. But what I really like about Nick, and we'll talk a little bit about this later, is that, Nick is one of the most transparent guys in the world I know. He actually posts all of his accounts online. He shows his trading results, both good and bad. And he kind of discusses, I think, in a very, very open manner, all of the things that go on when you're trying to run a successful trading book. So welcome, Nick. Great to have you. As always, as I said, true pro. Love working with you. So say hello to everybody.
Yes, thank you, Boris. Good to be back on the Trading Battle. And for better or for worse, I share my results. There are times where I really wish I didn't. There are other times where it feels great, but that's trading. And I think that, one thing that is cool about the Trading Battle, Boris, I know you and I share the same, passion for doing this, is that when you do battles, it's the ultimate transparency. You're putting your opinions out the line. There's no hiding behind hindsight, and it makes it fun.
Exactly. Well, Nick and I trade live almost every single day, quite a lot of times on YouTube. So we are, old hands at actually not hiding. There's what is it? Warren Buffett said, when the tide goes out, you find out who wears underwear or wears security clothes. That's it's pretty much it. You can't hide from the market, and we have certainly cherish that. Now, another guy who does not hide from the market ever, who is always in the game, really always in the game, is Chris Pulver. Say hi to everybody, to Chris Pulver. He's the head of Streamwise Capital. And, Chris, in addition to being a great trader, is also a golfer, as you can see by his attire today. Both Nick and I are very somber in black and white, but Chris is ready for a colorful way of life. Now, one of the things that Chris does that is so interesting is he has this multi-instrument, multi-strategy approach to trading. He kind of takes almost, I think, an investor's or portfolio manager's approach to trading, which is very unique, very successful, and we're going to get a chance to kind of discuss all of that with him. Chris, how are you? How's everything going?
I'm doing well. I had to throw that disclaimer out there that please don't mistake this for a Hawaiian shirt. In office space, this will never be a Hawaiian shirt day here where I live in Salt Lake City. So this is a little golf shirt. I like to keep it, fancy socks, funny golf shirts. That's about as wild as I get.
That's it. No, we like it. So, it's been, to say the least, historic over the last 2 weeks. I don't need to regurgitate everything that's going on because I think you've been under a rock if you don't know that, we had a near horrific, near assassination of a presidential candidate. We've had another presidential candidate literally bow out historically, never happened before the convention. I mean, we've had Lyndon Johnson bow out, but that was, he just didn't run. This was somebody who ran, got the nomination, and decided to bow out for clearly health reasons. I don't know if you've seen latest videos of President Biden. It's pretty clear something is going on there. We have a brand new candidate that is a female candidate that could potentially be the first female president of the United States of America. And against all that backdrop, we have a whole bunch of macro stuff, a whole bunch of geopolitical stuff that I think is fascinating. But for us as market junkies, the single most pressing question in terms of the impact on trading and market right now is, what will the Fed do? And I think all of these political layers really, really enhance this question quite a lot. So I'm going to throw it out to both of the guys. Now, I'm going to just sort of lay it down my initial thoughts of what's going on. And I'd love to know each one of your opinions of whether you think I'm on the right track. We are, in my opinion, pretty grossly overvalued in the market. I think 26 forward PE against a 21 normalized PE. The market is anticipating almost a 25%, earnings per share growth going forward in this environment. We're seeing Coca-Cola today. We're seeing Starbucks. We're seeing all the consumer brands actually warning that the consumer is retrenching. The consumer is not spending nearly as much money as we thought they would. So very, very, unusual background. We're seeing junk bond spreads at record lows. That means junk bond spreads to treasury spreads are very, very low. To me, every time I've seen that indicator, and I've seen it in 2000, I've seen it in 2008, it's just a glaring red signal of overvaluation. But it also suggests that the Fed really does need to cut rates, but they are stuck into this political moment, which I think is incredibly fascinating, that may tie their hands. So I'm curious. Let's take it to Nick first. Question first of all: will the Fed cut before the election? Yes or no?
So here's the thing. I think that the political landscape that you just set up too, Boris, our current situation is a fascinating one because it gets everybody angry and keyboard warriors get all excited. But for, as you mentioned, self-proclaimed market junkies, what really matters? You heat seeked it. And I know we're all thinking it too. It's all about the Fed. It's all about whether this economy hangs in here and if earnings are good. Like, regardless, I think that, if you saw the odds switch tomorrow dramatically in favor of Kamala Harris to win the presidency, I think the market would also be fine with that, because I think what the market just doesn't want is uncertainties about who's going to be the president. They just want to see a clear, favorite, so that they can get past that and we get back to what really matters to prices. What is the Fed going to do? So on and so forth. I just want to kind of just real quick, if we could share my screen for just a moment, I'll just show you just kind of what I'm thinking in terms of trying to feel out what the Fed's looking at. I mean, this is, common knowledge to us market junkies, but for maybe people who are listening, this is going to set up for where I'm going to position today in the battle. If we take a look at some things here, we've seen services PMI come in light under the 50 mark. We see manufacturing PMIs kind of steadily under the 50s. So this is the manufacturing and services component of the US economy, which has been kind of weak. And then we get into labor data, and these are things that draw my attention. We've got unemployment claims trending higher. We've got job openings trending lower.
Yes.
We've got unemployment rate trending higher. And now, I do want to say, I'm not here saying that this is, we're in doomsday mode by any means. Look at historical unemployment rate. We were coming off lows, but we are starting to trend higher. I think what you're starting to point out, Boris, with like weakening consumer and jobs data starting to shift, is a fair point to now the Fed's mandate, I think, is going to, in the back half of this year, start tilting the other way on the mandate. We've been so focused on, inflation's got to come down. I think we're seeing signs in the consumer, the jobs data, and like the PMIs, that we may be seeing true economic cooling, and that could call into effect the other side of the mandate, which is maximum jobs as well as price stability. So my opinion is the second half of this year, the theme for me is, generally speaking, rate cuts. And we'll get into more of this later, but I like the NASDAQ over the other ones right now, because I don't love as much the broadening out idea, because I think it could be a rocky road. It's not to say I don't think that there is a possibility of broadening in the market, but you mentioned overvaluation. It's a little bit sketchy. I think the only ones that have good earnings so far from what we've seen has been Google and Tesla and Netflix. So we'll see what the rest of earnings season brings. But that's generally my thesis, is I do think the Fed will cut rates possibly twice this year, but likely September.
So
possibly.
you think SEP and then November, or?
I think so. And your comment about, is Jerome Powell going to get scared because Donald Trump is, threatening him to not cut rates for the political reasons? I think we've got to hold Powell to it. He's been pretty transparent in his word, right? He's been pretty clear about what he wants to do. And he said over and over that, and if you reviewed all their transcripts behind closed doors and the meeting minutes, they aren't, talking politics and as on paper on the front end, they're not showing, their hand as to what they're going to do with monetary policy based on politics. So I think that their plan for cutting rates, what the market is thinking, is probably right. So I think they will cut before the election.
Interesting. Yeah, Powell certainly has consistently sort of tried to stay apolitical and has always said, I don't care about politics, and we're not going to make any policy decisions based on politics, regardless of how much heat. I remember in the first Trump administration how much heat Trump used to give him for not cutting rates to fast enough. So be interesting. You might be right that he just doesn't care, and he'll do what he thinks is necessary for the economy. What do you think, Chris? Chris, one thing I wanted to ask you is I know you're sort of a expert or a student of lots of contrary indicators. One of the contrary indicators I think that we always see is that the market actually tops when the unemployment rate bottoms, right? It's kind of like it's one of those key metrics that we like to look at. It. There's always a lag. There's always a time lag. But looking at Nick's chart here about unemployment has starting to really crumb up, and we all know the Somm rule. Even though the inventor of Claudia Somm, who's a great Fed economist, has actually said, yeah, it's my rule, but it doesn't work right now. But I think it may actually be starting to work right now. So, I mean, I'm wondering, do you share the idea that we are peaking on prices?
Well, let me touch on the rate decisions and the rate cuts. I think that what the Fed is possibly willing to do is the market's already been moving aggressively towards. I mean, it's been a wild year to think that the market anticipated with an aggressive Q4 rally that we're going to have 6 or 7 cuts this year. And then we went to thinking there's maybe going to be 0 cuts this year. And then there's going to be 1. Now there's going to be maybe 2. I think it would be a little crazy to have a September rate cut and November simply because it's 2 days after the election. The November FOMC is November 7th, and the election is Monday the 5th. That would be a wild, wild week to introduce that in addition to an election with all the drama that's going to surround that. So I also think that right now with some of the data points that Nick pointed out, this is a cut that is just a little taste of relief for the consumer, in my opinion. We have had sticky inflation, yes. We have housing affordability at an all-time low. Right? We have prices going up. We have rents that are catching up. We have interest rates that are still hanging out at 6.5 to 7%. I mean, I was actually just sharing some personal stuff here. I mean, over the weekend, looking at homes, the difference between 6.99%, 6.45%, you can buy down rates by another 50 to 100 bips. I mean, I would love to see an assumable mortgage, which is about 23% of the mortgages in the U.S. are assumable, but you're gonna have to come up with a hefty chunk to assume that mortgage because essentially you're buying out the seller. But there are ways to have people buy into homes that are affordable because at their current rate, the average price is like $1,000 more a month in mortgage just by rates alone. So I think this is, even though 25 basis points doesn't really make that big of an impact, it's the start of 2025's rate cuts. It's the start of over the next couple of quarters. There's a chance to buy a car. There's a chance to look at homes. There's a chance to get in those investments in those longer term things of 5 to 30 years that people have been squatting on. They haven't been able to afford a house. They can't move. They won't sell. And I think that what's going to be interesting is, look, at the end of the day, I think something's going to break. And so could it be the stock market? Yes, maybe. But when the first half of the year is up over 10%, majority of the time over the last 70 years, when we have a strong first half, we tend to have that momentum carries into the second half. So I don't think that the top is necessarily in. Having a pullback here in July, we typically have, Jackson Hole in August. September is September. There's usually a little pullback in the September effect out of summer. But I still think that the market, with a little bit of certainty, it's either going to be possibly Kamala Harris or Donald Trump. The election's going to have drama around it, but market's going to like that. If the Fed cuts rates in September, that's pre-election. And I think, like I said, this is a cut in September and probably December for the consumer and a sign of things to come. Things will get a little bit easier, which I think is helpful. Does it spur on spending and crazy amounts of travel and leisure? And maybe. But if people have been feeling pain, this is a little bit of relief. And so I think that, supply and demand change in the housing market. I think that people are willing to go out and, enjoy the holidays. But it's, look, Nick and I talked about this on the show. You ask a lot of people, you just ask, normal everyday folk out there. It's like 4 years doesn't seem like things are better. Now we're sitting here talking about trading, investing. We're at all-time highs. 401ks are up. pensions are up. All these things are good for the passive investor or the active investor for the most part. But as a day-to-day consumer,
Yeah.
houses
Well,
are affordable,
it's
gas prices are up, grocery
right.
prices are up.
It's
We pay attention to every single day,
correct. I mean, if to the regular consumer, it's all about cost of living, and it's just certainly
Correct.
been. I mean, even us. I mean, I don't know. I'm sometimes like shocked. Like, I never look at my grocery bill, but like occasionally I'll go, look at it, and I'm like, that's ridiculous.
Yeah.
Like you do have sticker shock. And I think
Costco at all-time highs.
I think I paid like $12 for like 7 apricots the other day, and I was like, that's just insane.
Yeah.
So so I sort of agree with you. I tend to be a lot less sanguine than both of you guys are. I think I think it's very realistic to assume the election is going to be it's a completely different story now. It's going to be tuck and go. That actually creates a lot of instability. The uncertainty will be who's going to be the winner, and it's probably going to go to the wire. I mean, there's a lot of stuff that that we're not looking at. So it'll be interesting. In some ways, somebody said something very interesting. It's like the Republicans, like it's like the dog that caught the car. They've been trying to get Biden out, and now they got him, and now they're like, oh my God, we have a whole new story that we have to run against, and it creates a much more interesting dynamic, for the political junkies, but probably a lot more uncertainty for the market. So we'll see how it goes out going forward. But enough of macro. We've had we all know that we can all have opinions, but what makes money is trading, and trading is always an art of just trading what is, not what you think it should be, right? Which is what we all look at and try to do. So with that, let's do our first challenge, which is kind of an interesting challenge because it's unique. I've never done this challenge with any of you guys before. The challenge today is to trade an asset that reminds you of your opponent and explain why it reminds you of your opponent. It's almost like an SAT essay question here. So, so let's start with Chris. I'm going to put you on the spot. Trade an asset that reminds you of Nick and explain why. Oh, and look at this. Chris is
okay.
And don't say gold, Chris. You can't say gold.
Well, it was gonna be gold or tech because every day I'm on with Nick, it's either XLK or it's gold. So, I had this chart up because Tesla just had earnings. They're down a little bit. There's a little over optimism. They missed on revenue. Actually, they missed on EPS here. So revenue was up, EPS was down, and usually I was just listening to a podcast about this. They going into this earnings season, a lot of companies were potentially going to be fine on EPS, but revenue is going to be the true story. So, revenue up. I mean, this being down about $15. Let's just talk about technicals here on Tesla. So I'm going to say this for my trading battle. If I'm choosing an asset that, if I'm going to trade for Nick or something that reminds me of Nick, it's got to be something in like the top 10 holdings of the NASDAQ. So if I pick anything in the top 10, that would be my trade. As long as and here'd be my trade. If I'm in Tesla, I'm looking to scoop something up around 2. I don't know if it's going to drop this much, but I'm going to put a pending order in at 205 on Tesla and see if that gets filled. And I'm going to look for something, because this is post-market. We might have a rout on Tesla again tomorrow. There's some good demand down here. We have some inefficiencies as this thing ripped up, 40+% in like 9 days. It was a ridiculous run. That peak to trough was 98%. 98% on Tesla. It's unbelievable. On what?
What was 98%? I'm sorry. What did you say?
This low to high was 98% to the upside.
Yeah.
Isn't that crazy?
Yeah,
that was
a crazy rip. That was I was just like, why is that ripping so much? I guess it was all into earnings. We very often have this enthusiasm into earnings and a decompression afterwards. So interesting. So you're looking to buy the dip in Tesla, basically.
I'll buy the dip on Tesla. I think that because the narrative has shifted quite a bit where there's always like these emotional swings with you like Elon Musk or you don't. But I do think that if you give Tesla time, Tesla is probably going to be a company that doesn't employ a single person because it's going to be autonomous. It's going to be robotic, and it's going to be a cash cow, a margin maker. It'll be like the NVIDIA of energy or NVIDIA of cars or something where, unfortunately, there might not be a single person working at the company. But I do think Tesla, from an energy play and auto play, could be very profitable. And so that always helps for investors. But there could be a lot of things wired to, Elon Musk being a little outside the box and a little crazy and extreme. But anyway, I'm going to put a pending order in. I know that we've got to be careful on these with the feed. I'm just not going to not going to over leverage on the lot size. I'm not going to pull a Gary Fickhart when he goes like 50 lots in on Ethereum and try to double his account in 2 minutes. So I'm going to go in with a little bit more respect to the $10,000 account that I have. So I'm going to look at a pending order here around 205 and place a limit order here. So I want to make sure. I know that we should be able to place limit orders. But I know in the past when we've executed, we need market orders. So let me go ahead and just put a trade in here.
I think I think in the CFD space, you may not be able to place until tomorrow. We're gonna have to actually wait on this because I don't think they're trading it now, are they?
I don't know, but if it's pending, I'm just going to wait for it to fill the price anyway. Okay. So let's get lot size wise.
We'll just have to pend it and see what you're doing on the lot size here.
Okay, so I'm going to go.
There's a comment here from a viewer that I thought was kind of interesting. He said that Tesla is sort of being associated now with Trump because, in case you're not following the news, Elon Musk has pledged $45 million a month to the Trump campaign, which is an interesting bet and would work out, I think, well if Trump wins. It could really bite him in reverse if he loses because, then, of course, if we have Kamala Harris as president, they may have all sorts of putative
put it on the line with that.
But on the other hand, I will say this: it doesn't really matter. In some ways, I do agree with Chris. It doesn't really matter what you do to Musk because his margins are the best in the business. So you can't really hurt him because he's actually got the more units he sells, the better his margins are because he's got such great cost control versus all the other. I feel like all the other cars
is such an enigma to me because I don't understand. He's the multi-billionaire, not me, but he has a great strategy of making fun of or angering his primary audience in the EV world that was, so significant for so long, right? Like people who lean left are more clean energy, generally speaking. And at the same time, he also made fun of the Chinese president today on Twitter. So I'm like, you're just making enemies with all the people you shouldn't be.
I think, I guess his view is that he really thinks he's Tony Stark, that he is untouchable. I mean, to be putting Winnie the Pooh cartoons on Z, which is like considered to be verboten completely, really takes a serious amount of balls, given the fact that also China is his most profitable market. But I guess he feels like they need him more than he needs them. It's interesting. Listen, as we say in Yiddish, sei gesund, go in health. He's been a great entrepreneur and a great investor for anybody who's been in his companies. So we'll see how that develops. Now, what about you, Nick? What does Chris remind you of, and what trade do we have for you?
This one's too easy for me. I've, years back, I did an interview with Chris, and he was telling me about his kind of longer duration, long-term positioning in the FX world. And I know this is exactly opposite of what Chris shared with me in terms of he basically has a swap collection strategy. He also thinks that the Swiss franc over the longer term may weaken. I know that Chris has talked to me all sorts of ways about the Euro CHF. I know he's talked about that one with me. So he's talked a lot about the Euro Swiss franc over the years. We've discussed the Swiss franc, how there's some positive carry trade, especially if you think we're in a not incredibly turbulent time. This could be a really decent trade to collect some positive swap over the longer term. So I pulled up dollar Swiss and I did the exact opposite of the carry trade. I actually shorted dollar Swiss, mostly because I like the technical setup. I also am leaning more on the bearish side of the dollar, as you could probably guess, due to my thinking of rate cuts coming down the pipeline. So I shorted dollar Swiss. Longer term, I think it very well might be the Swiss franc might be an opportunity to collect some positive swap, but in the short term, I like the reversal back up to this level of resistance. The downward trend seems intact overall, and if it doesn't hold at this level, then I'll stop out just above it. So again,
I'm curious, looking at your process, how do you draw your stop? What determines? I'm looking at, is it the wick of that red candle? The close of that red candle that is the stop, the top of that box. What determines the top of that box?
Yeah, so I'm basically just looking at candle bodies, and I include wicks into my zones. So we can see like you've got these V reversal spots. So clearly the market was bouncing off of that level when it took out that level. It was a big slide. So as it comes back into that area, I'm looking for that level to continue to act as a, see something previous, a big reaction to this area. If we don't, that's my cue to just say, okay, you were wrong. Get out of there.
It's funny that Nick mentions that trade because that was off of that pocket that was created. That was the reason I got long dollar Swiss, and that was a beautiful non-FIFO trade right back to that pocket.
Oh,
So that was a
nice.
nice little 88.50 to 89 for a little scalperoo
What-
this last couple weeks.
Sorry, what made you go long? I'm just curious. What level did you get long?
That inefficiency. I mean, as soon as we settled in around 88.40, 88.50, I put in a non-FIFO trade because I've already built a core position on dollar Swiss long. My break even is around 88.50 on the net position. So I mean, if we go back to 2023, we started out at like 85 or lower. So anyway, once we hit some pretty good support off the inefficiency, I scaled in. To me, I was like, you know what, I'm willing to take this down to 8,200, 8,000. Like I'm very small on the position, but it was a nice little scalp for 50 pips. So I just took a non-FIFO trade, grabbed some profit right there where Nick is getting in short. And one more question. We talked about the Fed rate cut, and Boris, you'd mentioned, the market's a little bit overvalued and a little frothy. I also think that one big fundamental move in the Forex market this year, if the dollar starts to aggressively get priced in with rate cuts and the dollar weakens, the one level I'm watching really carefully is the 103.90 level on the DXY. I've been not loving the dollar direction for individual currency pairs, but if we can get a clean break above 105.60 or a clean break back below 103.90, if the Fed cuts rates and the market wants to run with that, this also, I think this fuels a little risk on. And to me, this is the classic inverse relationship with stocks going a little bit higher because the dollar gets weaker. There's a lot of broad market that can benefit. Commodities can benefit, risk on can benefit. All these things can benefit from weaker dollar. And as we've seen with interest rates, we've gone from zero during COVID, rallied up to these crazy aggressive cycles over a 2 to 3 year period, and then now we're starting to go back towards less restrictive rates. And so the Fed at 5.5, cutting back to 5.25, 5, 4.5, 4.75, looking out to 2025 September, you're talking about like 4.5, 4.25. I mean, that's a big difference where we are now. Now, if the Bank of Japan stays where it is at 0 to 0.9%, but the ECB cuts and the Bank of England cuts and the Bank of CAD cuts, this carry trade that I've been in since 2023, I've got to watch this carefully because if we look at currency strength from yesterday, it was all Japanese yen strength, and we've had intervention, and there's an interesting dynamic with the Nikkei and the Japanese yen. But I do think that at some point the Japanese yen gets repriced. I do think this carry trade unravels. Going into 2025 is going to be about a 2-year mark, and we have those periods where I've experienced it from 2007, 2008, 2012, 2014, 2020. I've experienced this, carry trade for a couple of years and then a quick, aggressive, high volatility unraveling. And so I don't want to be caught on the wrong side of a yen cross. But my point is, dollar-wise, I haven't liked the dollar because individual currency pairs have been back and forth all over the place. Aussie dollar breaks out, fakes out. Pound dollar breaks out, fakes out. New Zealand dollar is actually selling off nicely. Dollar CAD's rallying nicely. Euro dollar pops up. It's been like you can't get a clean trade on the dollar crosses, and I still think this index is kind of stuck in a bit of no man's land. So I'd like to see if the fundamentals align with some technical breakouts with the dollar to give me a better direction to trade the dollar in general. And so, if we see, like to Nick's trade, if we see the dollar breaking lower than 103.90, the dollar Swiss might come down nicely. The dollar yen might have an aggressive repricing back down to like 155, 150, maybe more. I'm long FXY. I'm long Japanese yen futures. I've got Japanese yen plays out to 2026. That's my longer term play where it's like, I think I'm good enough to scale in by 1-2% and get some type of a, budge on the Japanese yen where it doesn't get weaker forever. We're at 30+ year extremes on the Japanese yen. And I do think that a repricing would be really crazy.
We all know when the yen unwinds, it unwinds really fast. I think when we unwind, it'll be 140. It will not be 150.
Sure. I hope it is.
I'm old enough to remember when Aussie yen went down 18 big figures in one day when we did the unwind. I mean, we've all been there. Very interesting. One last point on the dollar, which I think is interesting just from a political point of view. Trump administration is incredibly dollar negative, or sort of like it wants a weaker dollar because it's very export oriented. It's very mercantilist in its approach. So that will obviously be the boulder that gets pushed over the edge. You get lower rates, and a Trump administration very likely going to have that 103 level broken, like you said.
Sure.
Gentlemen, time now to talk a little bit about what we're all trading for. We're trading for charity. Some really, really good charities that both gentlemen are trading for. Nick is trading for Habitat for Humanity, which I'm sure many of you know from former President Carter's involvement in it, who, by the way, still is in a hospice. I mean, somebody just told me this the other day. Yeah, I mean, he's still kicking it. God bless him. So what do you, can you tell us a little bit about the charity and why you chose it and why it's sort of your favorite right now?
Yeah, of course. And again, I've battled a few times, won a few times, lost a few times for Habitat for Humanity. So it's good to be to do it again. Hopefully we can get the win. But yeah, it's pretty straightforward. It's all in the name. Habitat for Humanity is doing good for people who are in tougher spots. And I always think, Boris, here we are, we're debating our first world problems of whether things go up and down, and we've got it really good. So hopefully, we can win some money for some people who need it.
That sounds great. Sounds great. And of course, Chris is actually also has a great charity, the Humane Society of Utah. Tell us a little bit about that. I mean, we're all pet lovers. I got 3 dogs. Chris has got 1, I think, right? Or do you have more?
I got 1, but Humane Society almost got me 3 because I went to look and found a nice little friend sibling for my. So I have a French bulldog, and I actually found this little female Staffordshire Terrier that was just adorable, just a sweetheart. And I mean, I felt bad because we were on the way out of town, so it was like we stopped in, checked out. I was like, I'll be back in 3 days. And I'm like, if she's here, I'll come get her. If not, I hope she went to a good home. She was taken. Wasn't a surprise. But there's a big movement out here to make every Utah shelter no kill, which is great. There's dogs galore, and they all deserve a good home. And anyway, the Utah, I mean, I've done a battle for Kitty Crusade, which my girlfriend works really closely with, and they do tons of rescues and fostering and give great homes. They've got a huge social media following. And so, humane societies and animal shelters deserve all the help they can get with blankets, donations. They do, cats, dogs, rabbits, birds. I mean, you name it, they're trying to help them out. So it's just always a good cause. And it's not far from me. It's only a couple miles away. So if I feel like, sometimes my dog is a little high maintenance, and I'm like, you know what, man, you need to appreciate what some dogs don't have. So no, I'm kidding.
I think we're all spoiling parents when it comes to our pets. I don't want to tell you what I feed my dogs every single day. It's better than most human beings.
Right. Yeah.
I prefer. One thing I'll say about dogs, if you're thinking of adopting one, take it from me, who's adopted many dogs. The mutts are an unbelievably better choice than a pure breed. I know everybody wants a pure breed, but actually mutts are much healthier, much better personality, much more well-adjusted. Great choice. Just get a mutt. We have a couple of mutts. We have one pure breed. He's absolutely insane. So, because it's much harder to, for these shelters to adopt a mutt, but they're really much better dogs. So that's my only comment on the pets. I usually never comment on charities, but this is a topic I feel strongly about.
Yeah.
Anyways, let's get to our second challenge, because we have an interesting challenge coming up here, which I think is also really interesting. This is what I call, gun to your head challenge. The challenge here is orange is the new trade. You need to trade an asset that you could pay your bail with. That means if you are sent to jail, you got to put your money into something where you think you're going to be able to take out and pay bail with. And that's never a good idea, just to tell you. This is not, we're just doing this for fun. But it's kind of an interesting thought process of what is it if you absolutely had to, bet it all on black, what would be that black or, orange that you would do? So let's put that to Nick, actually. What would be your bet it all on black trade today? Wait. Oh, I thought he pulled up gold.
I'm saving this one. I'll come back to that one. I'll make my way there. No, this is my other double barrel. This is the other round is the NASDAQ. So I went long the NASDAQ. And I think this is a good opportunity. I like this, the creative way this prompt was written. Another way of writing it is like, what is your absolutely most convicted trade right now? If you were to leverage it up and YOLO into it, which again, as you mentioned, Boris, no one should ever do that. I know probably a lot of people in the audience have made that mistake before. And it feels like anytime you YOLO on a trade, that's the one that never goes right. But
so anyway, YOLO, you do only live once. That's unfortunately
that's exactly right. That being said, I do think that I think that there is, and we go back to the concept of valuation for just a second on the NASDAQ, Boris. I do kind of, well, no, not even question. If you look at historical valuations, we're pretty richly valued when you take a look at big tech stocks. There's no question on that. The debatable spot for me, which is tricky, but is price to earnings on a index level has been a terrible predictor of when the market actually tops out. That's the thing is, can you acknowledge, okay, we might be expensive? Yes. But the market can demand a very high average price to earnings if conditions look very favorable, if you have earnings coming in very strong and you don't have World War III pounding on the door like we did in 2022. I mean, we still have serious concerns globally, the economy, there's questions, like there's no doubt there's always a boogeyman somewhere. But I think that on a relative basis, we have a lot of hype around the AI trade. And just to be frank, I do think that whether you like Trump or not, the tax cuts for big businesses could spur a little of optimism on stock prices. Now, I always like to preface this. I'm not saying that I think Trump will be great or bad for the economy, because the stock market is not the economy, right? When we're talking about whether or not Trump's policies will be good or bad for the economy, that's a different question than, do you think cutting taxes for big businesses will be good for the stocks or not? There's no question that if you give them more money, they might do different things than you want them to. They might just buy back their own shares, which is bullish for the stock, or they might invest a bunch of it into innovation, into technology, which is also bullish for the stock and for the global, for the overall market, since all the big seven, the big eight, whatever you want to call them, they're all each other's customers. So if you keep money in their system, I like the big tech trade. Right now, I am not a better professional when it comes to trying to predict who the president's going to be. But right now, odds seem to lean Trump. And again, that is, I care more about my money than I care about, presidential opinions. I'm looking at, what do I think is likely our scenario right now? That's what I'm seeing. I also see rate cuts, like I mentioned, on the table, and I see earnings growth for these guys. So I really, if given the chance, am I broadening out? Am I going into, industrials and all these other areas? Not before I stay to the tech trade. That's just how I'm at, or where I'm at.
I think look, it makes a lot of sense from a like a big macro point of view, because big tech is the only place where margins are immense, right? Like industrials are always constrained by the cost of goods sold, right? They actually have cost of goods sold. High tech has no cost of goods. It's all intellectual capital, if you think about this, right? NVIDIA doesn't even actually make any of the chips that it designs. It literally gets paid on purely its own creativity. So if you can just, sell an extra unit, it's literally 90% profit. And that's where the bet in tech is. As long as you can
and Boris, the thing is, not to cut you off, I just wanted to add, because what you just said was really key there. Not only do they have the margins and the growth, but you have to, if you're a bear on this market, and I'm not saying that you're silly if you are bearish, but I'm saying, let's think about this. You might say, oh, well, those are overvalued. Again, we already established that if you look at trying to time the market based on PE, it's very, very, it's a tricky trade to make.
Right.
You have to tell me, if you're bearish on this market and you think that the leaders are going to stop leading, they're going to start leading to the downside, tech's going to really roll over. Okay, what's going to crack the story for earnings for these giants? Now, again, we're going in earnings season, so I could sound like an idiot in 6 weeks. But right now, based on the information we have in front of us and a possible Trump trade, if you will, I like the risk to reward.
Okay, now let me play a little bit of devil's advocate here, because we're looking at this chart. I love this chart because if you're looking at it, it's clearly clean uptrend. But as always, every pattern contains within it the anti-pattern, if you look hard enough. And this particular pattern is fascinating, because if you look at this chart, it's actually pre-setting up a head and shoulders rollover as well. So in other words, if we drop below like 19,200, right, on the right side of the shoulder, we're actually going to put in a head and shoulders formation, which is clearly very bearish. So to me, this is sort of interesting. We're on the cusp of lots of different possibilities here. And I'm sure Nick is aware of it. That's why he's got his stops properly. He's got his stops pretty much underneath that breakdown level, where it would turn from a essentially a nice steady uptrend into a rollover of a Head and Shoulders. Kind of interesting.
That's exactly right, Boris. And that's the thing. I think you and I see the same thing there. If you get a break of that structure, am I still as adamantly bullish on the market? Yes, thematically still, but to your point, if you get a Head and Shoulders kind of formation here where you break this support level, that's going to be my cue to go ahead and get out of the trade. If we get further down and we see a setup and maybe there's good earnings that accompany it or something like that, then I may try again. But to your point, yes, there's a stop below this level in case I'm wrong about it.
I will say that very often when you have that Head and Shoulders pattern, right, the natural inclination is, it's going to collapse and go down, but it actually doesn't. What the market does, the market loves to torture you. It's the market that loves to rally almost to the highs, create a near double top, and then distribute like a waterfall. If you've traded this pattern quite a lot, you know that it's nowhere near as simple as like, just sell the break. The break is almost always a fake out, but it is a longer term signal that there is structural weakness in the index. So it's very interesting. I mean, we're really at this pivot point in lots of different ways, and the charts are telling us stories that we're all living, on a day-to-day basis. So,
can I add something to that with the NASDAQ trade? So.
Yes.
I did a little video on TradingView last week, published it on my YouTube channel, on Twitter, and all over the place. I think that there's a pretty clean technical setup with this chart, just like we're showing. Look, I like another leg lower, but I think all that leg lower is a correction based on a 5-wave move to the upside. And I'm not a wave theory, I'm not an Elliott wave specialist. Because it gets too subjective with the Roman numerals and small and uppercase letters. But I will say that from the 2022 correction we had, and we formed a nice base in summer and fall of 2022, when we had that late rally in Q4. I look at this low to high push we had. Wave 3 is what got us into this year's trading. We were in the cusp of this wave 3 seasonality. We just started to melt up. We've only had like a 1.5% pullback in January, and then we had our 6% in the SPY and 8% in the Qs in April. To me, this last push that we just had after forming 6 days in a row of bullishness, 6 days of all-time highs, and we just dumped it all last week. To me, this makes sense for a little ABC correction. And I'd love to see a pullback towards, even if it is a Head and Shoulders that materializes, I think the NASDAQ coming back to like 18.5 is a great spot to look to buy again. 18.5, potentially down to the April lows around 17. Now, I think that's a good opportunity to buy short term because, Boris, if we get back down to like 17,000, we test those April lows. To me, that's the bigger ominous sign of a massive Head and Shoulders and a major top that might be a multi-month, multi-year type top. So anyway, I just think that just wave structure wise, it's very, very clean, and I don't find that very often. So that's what I'm sticking with.
Yeah, I think we're all in agreement that there's a possibility this thing could roll over, but at the same time, that the rollover could actually create a very interesting short-term pop for it. As everybody gets super bearish, as the bears finally start to pile on. It typically always happens. This is a classic kind of retail move where you have a momentum move, everybody sells the bottom and it goes right back up. They think, it's positive now, and then it goes back down for real. It's almost never it's always a rug pull to try to take out as many people as possible. So we've all traded this quite a lot, in different ways, and it's been it's always a challenge. So it's really I think it's to examine it. So I'm sorry, we need a trade from you.
I got it. I'm already in, dude.
All right,
all right. So this is a get out of jail. This is a bail trade. So here's why. I take that as you got to be in today, out tomorrow. And so we've had some decent volatility on the yen cross. I'm going to take this as a pairs trade. I'm going to go short euro yen and long pound yen for the inverse. Right now, the daily trading range on the pound yen is about 155 pips. The daily trading range on the euro yen is about 130 pips. So it's enough for me to set a 100 pip stop loss and a 200 pip take profit. I'm going to go short the euro yen, long the pound yen if we have a risk on day. So considering the currency strength today looked like this, and you're thinking, oh my gosh, that yen came out of nowhere. Not really. We're just getting some continuation post intervention. But if, for the next, let's say 1, 2, 3 days of trading, the Japanese yen gets weaker, then one of those trades is going to be right. So my goal is set a stop loss that manages the risk, set a take profit that's bigger, net some profit, get me out of jail. There's my bail.
Interesting. Yeah. Wow. All right. It's a quasi straddle with a little twist, with a little gin and tonic twist. All right. Sounds good. Sounds good. Gentlemen, let's talk a little bit about the products that you guys both offer. Nick, of course, has got the great A1 trading dashboard. Please tell us a little bit about what you offer and what some of the Trading Battle viewers can get privy to if you have any offers that you'd like to give to them.
Yeah. So big thing with the Edge Finder, if we'll show my screen for just a second. I referenced this earlier just to show you what I was talking about. This is the Edge Finder Pro. It's our company's kind of flagship macro data tool. The one thing that I would say that sets it apart from a lot of sites where you can find data like this and you can browse, first of all, you have a lot of things in one place. And this has been the curation of, my market theory, but also many other contributors. My colleague that works with me, Frank, he comes on the show all the time. We've been doing market stuff together for almost 10 years now. Chris has had a ton of input. Like, we've had so much feedback from so many different traders about what they want to see in a single place. We're always adding new features to it. We do a lot of economic data, but more importantly than that, is it takes the data. The whole purpose is it's great to be able to see all that data in one place. That's a resource by itself. But more importantly, what it does is it takes that and it applies an algorithm to that stuff. Like, we've pre-coded, how is the Dow Jones impacted by the latest GDP statistics? Or how does inflation, which came out really good, how does that impact the overall score of the Dow Jones? It's taking each piece, it's calculating up scores, and it's giving us bullish and bearish leans. It's not necessarily telling you, oh, it's a buy right now or anything like that. It's not a very technical tool. It's mostly data macro tool for traders looking to use this. I use it as my watch list every single day. Straight up, what I do is I don't usually trade minor currency pairs, and I take out the neutral readings, and that is pretty much what my watch list each day entails. So I just come on here, I see, show me the ones that are giving a bullish or bearish reading. I look at the charts. If there's something that I like, if I feel I get a good risk to reward setup on it. So you can see there's my NASDAQ idea that I discussed earlier. So that's kind of how I use the tool. We have a code that is TTB for anybody who would like to get access. The Trading Battle has a special code which gets you a nice discount on the tool if you're interested in getting access. You can also find information on our website, a1trading.com, if you want to read more about the tool, and you can find it out there.
Sounds awesome. And then
Nick, will you keep the Edge Finder up for a second, and will you pull up the interest rate data and go to the 10-2? Boris, I want to get your thoughts on this. We've been in one of the longest inverted yield curves in history.
Yes.
And one thing I'm certainly watching is when we get out of that, I don't think that's a good sign, because as they say, history doesn't repeat, but it often rhymes. We've never had good times in the market when we come out of that inversion. And I understand that we could have steepening in the yield curve. We could have things get worse before they get better, but I'm not that positive or optimistic going into 2025 if we come out of this yield curve for the first time in 400, 500 days or longer. I mean, my gosh, it inverted when 2022, and I think October is going to be roughly that 2-year mark. And historically speaking, from inversion to exit of inversion is usually a 2-year window. And so this is potentially the blind spot that the market might not expect going into the end of this year. Because usually, historically, election years are solid, Q4 is solid, and everyone puts blinders on and, let's get to those gamma squeezes, let's get to the Vanna charms, let's get to all these open interest levels. But if we come out of this inversion going into Q4 and we finish on a sour note to end the year, it doesn't bode well for how 2025 looks to shape up. So I'm just curious on your thoughts. Coming out of this yield curve, what does it look like for you?
Yeah, listen, we all know that every crash is a credit crash. Like, it really has nothing to do with equities. It's always a credit crash, right?
Yep.
So that is a clear warning sign. The fact that we're just so grossly overdue for coming out of inversion. I mean, we talk about history. Historically, never done. I always kind of laugh when we talk about historically, because first of all, we never have enough sample sizes to even make a scientific claim when we're doing social sciences, which is essentially what we do here. But secondly, you see how history just, everybody was screaming in inversion, and we're going to be in a depression by now, right? Completely opposite. We haven't been. Yeah. So perhaps when we flip the other way, which, presumably is a sign of healthier economy, could actually be a much more dangerous situation in terms of a stress on the credit markets. I think that is the key thing. I think inversion going positive could create some sort of a stress on the credit markets that then, of course, then translates. Because it's always the credit markets you have to watch when you're looking at equity markets. It's always the debt, the money you have to pay back that makes you flow out of the money that you speculate with. So just, I'd be careful. I agree with you there. Absolutely. Interesting idea.
What are your favorite symbols to watch for if you're looking for like credits? I look at JNK. I've been watching like construction data for unemployment and layoffs, but like what are you watching the most when you're looking at these spreads and junk bonds?
I don't think you need to get fancy at that. We talked about this at the beginning of the show. I said the junk to treasury spread at nearly record lows. That compression is red sky at night. Was it red sky in the morning? Sailors take warning, right? That's it. It's red sky in the morning. It's a dangerous time. I think that's the thing that I'm going to keep watching continuously.
Sure.
And when that starts to expand, that's the problem. It's not that it stays low, but when it goes the other way, that's when you have the stress. That's when you have the stress in the credit market that then drives other assets down. So yeah, absolutely worth watching. What about you, Chris? What does the Pulver report offer to the great speculators out there?
Yeah, I mean, I've been kind of out there, open and willing. Just trust content. You want to find me? You can find me on A1 Trading. You can find me, doing shows like this. You can find me on my YouTube channel. I'm live every single day, whether it's YouTube or it's Twitter or it's Facebook or it's LinkedIn or I'm running my trading rooms. What I offered to 8Cap or the Trading Battle is 50% off any type of private coaching. I think that I've helped a lot of traders out there. I've always offered services to help people with their Forex trading, talk about strategies, talk about mindset. I mean, a lot of things, it's like a little tweak here and there. I mean, I say that because I come from the golf background. I was an instructor. Right. That's where I just kind of was willing to travel the world and set my own hours and things like that. So getting into finance, I mean, I realize a lot of traders out there are still looking for help, looking for good ideas, looking for something to improve their trading. And, a lot of traders out there just need a couple refinements. Stop taking that terrible trade. Stop fighting a drawdown. Stop. I mean, it's just convincing them that, look, it's not that hard, but better equity management, better decisions. What do you do well? What trades your favorite? Stick to those. Stop going all over the place with all these shiny object strategies. Right. And so I just offered, I'll cut on my my instruction by 50%. So there's a promo code. I've got them all set up. So yeah, I mean, I spend like 1 hour, 4 hours, 8 hours. I'll do full workshops with people in small groups. If anybody's out here wants to put together like a trading battle group and get me 10, 15, 20 traders, I'm happy to do a Zoom session or Google Meet so we can all meet, talk to each other on camera and, screen share and just collaborate. So I'm just out there to help traders be better traders at the end of the day.
Yeah. And, I will say this, that unlike me, who has zero patience for teaching, as you all know, I'm good for an hour live, and then Chris has the patience of a saint. He's also obviously got a lot of experience as a golf instructor, which, by the way, is completely not to be underestimated in terms of the ability to teaching somebody is a skill in and of itself in trying to get them to understand the concepts well. So he's an excellent coach. I highly recommend you guys take advantage of his offers. As far as that goes, we are coming up to our final challenge. We're almost running out of time. So let's talk about our third challenge today, which is the crystal ball challenge. This is kind of an interesting challenge. I have some ideas what you guys might choose, but you might surprise me. What do you think will replace the US dollar as an asset? So Nick, you're going to go first on this. What do you think is the replacement asset here?
It's the easiest question in the world, Boris. Are you kidding me? The dollar isn't going to get replaced by gold. The dollar short term has borrowed the spot of gold on the historical timeline here. Throughout history, there's only one real money, and that is gold. And I sound like the ultimate Peter Schiff worshiper right now. But I could really just,
you aged about 100 years, but yeah.
I mean, the thing is, though, for real, I mean, did you guys see the Elon Musk tweet about like the fiat currency thing? I don't know if you saw that, but got a lot of attraction. And of course, gold bugs like myself loves it because it was like a picture of like a silver coin, and then the next one was a silver dollar, like they used to do back in like the early 1900s, and then it was like the current modern day dollar, and then it was like a Zimbabwe $100 trillion note. And the point he was just like saying or just putting out there is the age old metals stacker, which is real money. It comes out of the ground, it's made by God. That's like the theory that you always hear him say. And, whether you believe that or not, but the point is, they don't make any more gold, but they certainly print currency like it's nothing else. I like gold for the longer term. For the shorter term, I also like it because of the rate cut story. It is sensitive, very sensitive to interest rate cuts and real rates. When you take into consideration inflation and interest rate. So I like gold. I have a long position in my own, personal trading anyways on both gold and the NASDAQ currently. So I'm just settling into trades that I have currently myself.
There's a viewer comment here that the Kiwi he thinks isn't a big buy. Kiwi and Aussie, very, very, I think, used to be a lot more correlated, but they're still pretty correlated to gold, commodity currencies. They tend to do pretty well. Looking at this chart, what does this show you? This is a pretty parabolic chart. This is what? Oh, this is actually daily, right? So we're on daily.
That was that recent rip we saw for the last month.
Yeah. Are you looking at what are you looking at? Gold?
No, you did chart before, which was on the daily, which was like this one. Yeah, that's a pretty. Yeah. I mean, it's making higher highs, higher lows. Really classic trend move here.
Well, we entered into consolidation too, Boris. I mean, there was, in fact, actually for me this year, I made really good money during this time. During this time, I gave back a chunk of money this time, and I caught this wave higher. I've been pretty much long the whole time, just kind of trying to take my entries like I've shown you earlier, like looking for, pullbacks to support levels. And I think that 2024, I put out a beginning of the year video on my theory for gold, which was it's an election year. There's a lot of uncertainty about what's going on. And there was at that time even more with Ukraine and Russia, Taiwan and China. There's a lot of geopolitical and political reasons for me to stay bullish on gold. But then you had the central bank stories, not just in the US, but globally that seemed adamantly wanting to cut interest rates. So I like the upside more than the downside. You got central banks buying.
I thought you were going to tell me that the central bank stories of Russian central bank just
them too,
hoovering up every gold buy in the world,
offloading dollars for gold. Yeah.
Gold. It's the physical Bitcoin. No, just kidding.
Well, I that was the thing is Chris going to trade Bitcoin? Is that?
I am.
Okay. Yeah.
And I'm going to do it just like I did at the end. I'm going to buy Bitcoin and I'm going to sell Ethereum and I'm going to see which one makes me more money in the next couple of days.
So interesting. So you're going to do a pairs trade on this,
yes.
on this asset. Very interesting. Wow, Chris is always trading out of the box. Really a lot of fun to see that. So walk us through this a little bit. Talk to us about Bitcoin.
So right now we've had a day pullback on Bitcoin at 65.8. I mean, realistically, I would say from this little low to high swing, I'd like to see this kind of settle back into a slightly lower low. So the reality is, I do think there's probably more downside coming, but I'm going to pick the opposite side of one. So I think what I'll do is I'll probably end up, I'm going to buy Bitcoin and sell Ethereum. Although, let me take a look at both real quick. So Ethereum here with my 8-cap feed. I mean, Ethereum is certainly more choppy and maybe a little bit less volatile. So I think if I'm going to sell, I'd rather sell Ethereum just because we've had so much indecision here. I wish I knew when there's an official announcement for some type of ETF on Ethereum. I know that there might be one coming. I know that this is what this rally was all based on, Ethereum ETF rumors, and then we just came back, and I was pretty happy with myself calling a bit of a bear trap and a test of these lows on Bitcoin and Ethereum, and so I leveled into some of these ETFs. So I'm long BITO, IBIT, and I'm long on some of the Coinbase trades as well, just with my crypto wallet. But I've got to choose. I haven't decided yet, but I'm certainly going to do a pairs trade. It's just a matter of which one do I buy, which one do I sell. I'm essentially going to set a 2-to-1. I'm willing to lose on one side and willing to gain on the other side as long as we have some direction. And so again, give myself 3 days of trading. If we're cutting the battle off for our P&L by Friday, I will see which one stacks up. So there's been a little bit more pause on this, and so I might end up going. One more chart, Boris. Bitcoin versus Ethereum. Let me see if I can find this chart.
I was just looking at that too.
Yep. So I'm going to go BTH or BTC versus ETH, and I'm going to look at this one technically. I mean, it's such a messy spot right now.
It's a push. It does look.
Yeah.
It still looks tilted up, in my opinion. Higher lows, even though.
Yeah. I mean, it's been holding this for a while. So, I mean, to me, this is a Bitcoin outperformance. I think based on that, I'm going to go long Bitcoin, short Ethereum. That'll be my pairs trade. And I'll set it so it's a 2-to-1. So if I lose one, win one. we net
Now,
and we're positive to
can
donate
you,
to charity.
can
So
you walk us through pretty quickly? When you say 2-to-1, is it a 2% up, 1% down, equal weighted? How does
let me
the
find out.
mechanic of
Yeah, I'm
this?
looking at the lot sizes I can trade here with 8 cap. I mean, like I said, Gary took like 50 lots and needed an injection of liquidity, so I'm not going to do that to 8 cap today.
Yeah. Okay.
So I'm looking to see what lot size I can trade. But if I buy Bitcoin, let me go into the trade window here. So if I create the order and I set a market buy, if I buy 1 lot, take profit. Let me just look at a number here. So if we go up to hit this high or hit let's set a high at like 71.3. So if I go 1 lot, set a price at 71,300. I don't think that's going to be achievable necessarily. So let's see here. I want a stop loss probably around this, like, 30% level or just below that. If we bounce at 30% for a small pullback, I don't know. It's going to be tighter, Boris. I mean, I wish I could take. Let me see if I can do like a 0.5. It's flashing red, so I don't think I can take a less than a 1 lot trade on Bitcoin. So this is going to be a steep position, which I don't love, but we're doing it for charity, and
Hey,
so let's
we're doing
leverage this thing.
security,
Yep.
and we're gonna, you
Yep.
can't make an omelet unless you break some eggs.
That's right. That's right. So let's go from 65.9 to, let's say we climb back up to 70. I'll set a take profit here at 70, and then I'll look at the percentage based on that.
Okay.
So we're looking at a $4,000 profit, and so I'll cut that in half with my stop loss, and I'll look at right now I'm looking at around, let's go 63,000.
Interesting. Okay.
Okay, I'm going to go lower than that. At 63,500.
Right.
Okay, so maybe a little bit less than that. Let's go 64,000.
Okay.
So it's a pretty tight stop to the downside. That's roughly 2-to-1. So I'll go like 75.
Right.
And that way I've got 4,500 to the upside and 2,000 to the downside. That'll be my buy on Bitcoin. And again, this trade might not realize the full gain. So what I'm going to look for is set my profit target out large enough and high enough that, if this outpaces a sell-off in Ethereum, I'm just going to look to see which one I can close for more profit.
Yeah.
So if it net, hopefully I can make like $1,000 or $2,000 on the trade.
Yeah.
But I'm looking to see if we rip back to these highs again at 68.5 and Ethereum actually, test some lows. I think that's going to be a pretty good setup. So I'll take the trade as is right now. This is just over a 2-to-1. Profit target at 70.5. Stop loss at 64, which is pretty tight. And I'm going to take that buy trade 1 lot on Bitcoin. And there we are. And then I'll do the same thing, and I'll flip that for Ethereum, and I'll take the opposite side for a pairs trade. And let's go to the downside on Ethereum. So I will go trade here. Let's do a market order for a sell. 1 lot. Take profit. Let's go back down to these lows. I'm going to see if we can get to like 3,200. Okay, 3,200. Wow, I can take a much bigger lot size then.
No, you can do, because it's 1/10 the size. You can definitely do 10.
Okay, so I'm going to do, let's see if I can make the profit about the same. So I'll go like 15 lots. Okay, that's about right. And then 3,200 to the downside. And I'll cut that risk in half with a stop loss. So I'm essentially setting this up as like a dollar stop loss, like a price tag, as opposed to a price level like I typically trade a price level. But I'm going to cut this in half with, let's see, stop loss would be around, let's see here. I'm going 15 lots. Let's go to 30. Let's go up here to like 3,600. See what that looks like. 3,600, 3,650. That's about right. Maybe a little bit less than that. Wow, that's a big jump. Okay, so 36.25 in the stop. This is again just over a 2-to-1. I'll sell Ethereum, I'll buy Bitcoin, and go for a 2-to-1. There we go.
Interesting, fascinating. All right, would love to see how that plays out, and of course, we're going to be telling you in the next 48 hours exactly how all those trades play out. Who's going to be the winner? Trading without indicators is painful. Actually, it's not. I like trading without indicators.
Price action, baby.
Price action is where it is. Trade naked or trade.
I use the flip a coin indicator. You guys ever tried that one?
Oh yeah. I like the manatee random ball pick.
Oh,
that's a shout out to South Park with how the Family Guy scripts are written.
Yes, we Johnny, we absolutely love gold. Nick loves gold. He's long gold. So yes, Nick is long gold. Chris is long Bitcoin, short Ethereum, in a very interesting pairs trade on this asset play. And everything will be reported in 48 hours. So be sure to do 2 things. Subscribe to the Trading Battle, of course. Tell every friend of yours to subscribe to the Trading Battle, because you have It's incredibly useful, very interesting content. We hope you guys really, really enjoy it. And of course, as always, come back and see us next time. We're probably going to take a little bit of a break here for the August summer times, but then we're going to be back with a vengeance. And I hope to see you guys really, really soon. This is Boris Schlossberg for the Trading Battle. Thank you so much, Nick. Thank you so much, Chris. I'll see you guys in the markets. Over and out.
See you guys.
Take care.